All right, good to have you guys here. This is RC Peck, and this is my live market update. So what I want to do on these calls is I want to go into the market while the market is open and just dig around and see or look at what I'm seeing. And it's important in the sense that, hold on, I got something on my other screen here that I got to take care of here. What's important is that it's live. And I want to come at these kind of with fresh eyes to see what I'm seeing. And today I want to look at ARK Innovation Funds. Now there's a bunch of them. I wrote down just the active ones, and there's 6 ARK funds that are considered active. They have 2 or 3 index funds, but I'm looking at the active ones. And I want to do that because if they're not outperforming the market, then I don't want to be in them. And it's important to understand how to read price charts because price never lies. You may not want price to be doing what it's doing, but the great thing about price is behind price, there are millions or tens of millions or hundreds of millions of people voting, depending on what symbols you're looking at. So understanding price charts, understanding absolute price charts and relative price charts is extremely important. Okay, so let's jump over to the price charts. Now this is ARK Innovation ETF. This is their flagship fund. And what I wanted to do is just show you the entire time it's been publicly traded. So it's been around for a while. This is 6.5 years. It might be a little bit longer, but it's meaning it might have been publicly traded for 7 years. But let's be clear about what we're going to do here. I'm going to look at ARK Innovation Funds. I'm going to look at all of the symbols in their flagship fund. And we're going to talk about if this is a skip, if it's a get out of, if it's just a correction, and also what it tells us about the overall market. And this is a great symbol to use because this kind of defined what happened in 2020. I mean, this thing from the bottom of COVID, the COVID bottom, to where it peaked was up about 355%. Depending on which way you measure the markets, the S&P or the NASDAQ 100, let's just say that was about 100% up. So the ARK Innovation Fund, it trounced the market, but there's some interesting things going on with it now. So look at the screen here, and let me just do something over on this side, and you'll see the history of it. The first thing that pops out to me is it has just broken down. And when a price breaks down, that is a sign of weakness. Now, let me zoom in here because looking at 6.5 years of data is unnecessary now. But you can see that it was kind of holding at $110. That meant buyers came in at 110, and then buyers came in again at 110. Because you can see it bottomed here once, and it bottomed here twice. And then when the price came down again to 110, guess what happened? Sellers came in. So that's called polarity or a resistance and support line. So something changed in the environment and people are saying, you know what, I don't want ARK Innovation anymore. And now people are selling and getting out of it. So that was a very significant price break at 110. Now, before it broke below 110, that was a 30% correction. And I just want to say, guys, a 30% correction is not a big deal. It is not a big deal because it was up 350%. Having a 30% correction is no biggie. Now, potentially where you may want to start thinking about looking at this, or if it does turn around, where? Typically when you have a stock that's gone up multiples in a year, right? 3, 5, 10, 15, 20, 30x in 1 year. Expect a 40 to 50% correction. This is one of the things I teach in my trading course where you come in with ideas to help you become a great trader. So one of my clients, I was talking to him, or trading students, I was saying, look, only look for symbols that are up 5 or 10 or 15 or 20x, and then wait for them to correct that 40 to 50% and then buy, because what you often get from that is a 50 to 100% bounce. Pretty amazing, and it happens very quickly. So the first place we may see ARK Innovation, it's flagship fund. The first place we may really see this 40% down, let's just call it $90, 50% correction, And this would be an intraday, guys. It doesn't necessarily have to close at that, but it could have an intraday 40 or 50% correction, or we're looking at about 78. So for simple math, let's just call 190 and let's call $180. You could set an alert, and I actually suggest you do set an alert. I think it's a mistake for people to check and recheck and then check and recheck their symbols 19 times a day and then twice on Sunday, because it's only going to load up negative feelings in your brain. But what you can do is set an alert for when it hits that. So a $90 alert and an $80 alert would be great. So this thing has broken pretty major resistance and is now below 110. So what I also wanted to show you was here are most of ARK's actively traded funds. Now I don't have them all on here because they have one called Space or something that just came out. So it won't let me show you a longer time frame of these 5. But look at these 5 here. It's the same fund. You don't want to own all 5. You don't want to own all 4. You don't want to own all 6. You don't want to own 3. Just pick one. And my suggestion is you pick the biggest one, because as your brain can clearly see, it's the same fund. News takes takes all those charts down, it takes them all up. And one of the mistakes most investors have been taught is to be over diversified. I almost said over invested. We've been taught to be over diversified. And so what happens is people come in with 3, 4, 5, 6 in this equivalent ARK funds, and they think they're safe because their money is spread out. But as you can see, it's actually one symbol, and it's tricking or fooling their eyes because they have 6 symbols thinking they're safer. They aren't. Now, this is not just with ARK. I see this happen with precious metals. I'll go in and look at someone's account and they'll have 10, 20, 30 different precious metal mining stocks. Absolute way to slow the growth of your money. You're not having any more safety. You're not having any more security. But what you are bringing in is a lot of volatility, a lot of price violence. And that's what we see here. More symbols equals poorer performance, worse performance. And we're absolutely getting that here. So now what I want to do is I actually want to look within this ARK Innovation main flagship fund. So this is ARKK. It's their main fund. So here we have, let me just zoom over here. Here we have all of the symbols within this fund. And let's just see, there are 55 symbols. Now I've put 2 other symbols in here. I put in the S&P 500 and I put in the NASDAQ 100, the Qs and the spiders. Because look, if you're not beating the Qs and the spiders, you have no business being in the investment. It's one thing I teach over and over to both of my students. I have students that take my investing course and I have a trading course, but there's very similar, what I call first principles across both of them. And what I'm telling you is if you own something, okay, and it's not outperforming the S&P 500 or the NASDAQ 100, you have just invited loss and slower growth into your life. I know, Casey, you just asked me, RC, you're going to tell me the Genomics Fund is the same. Can you just tell me the symbol of that, Casey? Because I don't want to go look up which one that is. I mean, I guess I could go over here and see Yeah, if that's at ARKG. Yeah, if you look here, I just want to show you. Look in here. You saw that get a little bit higher, but it's back within the gist of it. So we get fooled. This is a super important point. We get fooled by words, right? Someone's like, oh, no, it's genomic. It's space, it's web, it's autonomous, it's a separate thing. Guys, price doesn't lie. They're all the same symbol. Okay, let me know if that answered your question, Casey. So here's ARK's ARKK flagship fund. Now let's do something really interesting here. Let's just go year to date. Okay, so here's year to date, guys. Oh my gosh, check this out. Spiders, which isn't even part of the fund, is the second best symbol out of ARK's investments. There's 55 symbols in ARK's flagship fund, 55. Year to date, there's one symbol, NTLA. We'll look at it in a second. Let me just write it down here. NTLA. There's one symbol beating the S&P. Now, the NASDAQ 100, the Qs, which is right here, has underperformed the S&P this year. The S&P this year is up about 13%. The Qs are up about 5%. There are there's 5 symbols that are outperforming the NASDAQ 100. PCAR, CSE, which is its symbol, REGN, okay, and then one more, PayPal. But I just want you to get how powerful it is that you can quickly sort, right? One thing people are taught over and over is trading is a lot of work, investing is a lot of work. It's not. Most people are just disorganized and they're being hijacked by words and articles and research that's actually not helping them. So year to date, there's only one symbol outperforming the S&P, and we'll look at that in a second. Now, if we went 1 month, I'm just curious what 1 month looks like here. So here's 1 month. Now, there's only 2 symbols beating the S&P over 1 month. 2, REGN and PCAR. This is pretty amazing, right? So even over a 1 month period, there's only 2 symbols. This really is fall off your chair powerful, right? And oftentimes someone will come into my world with 10 or 20 or 30 years of experience, and they'll go through my training and they are literally blown away by how much better they grow their money. So here's SPY in 3rd place. The Qs are down here in, let's call it about 7th place. Not many more are beating the Qs, and the Qs are underperforming the S&P this year. Let's just do one more. Let's see what's going on over 3 months. Yes, super interesting. Nothing's beating the S&P over a 3-month period in ARK's flagship fund. We're gonna have to go look at Regeneron Pharmaceuticals because it's really sticking up there near the top. But isn't that interesting? Just how a few simple tools can make your life so much easier. So I wrote down 3-4 symbols as we looked at different relative price charts. So let's do this. Let's look at the one that came up the most was Regen, REGN. And let's just look at this. Pretty ugly. It is a pretty ugly price chart. I want to just zoom out a little bit here and just see what this looks like zoomed out. Okay, look, it attempted to get above and it did break up to new lifetime highs in mid-2020. And then the sellers came in and it came back down into this just mess. So it's not uncommon to see a price break out to new lifetime highs and come back in. Now, when it came back in, it didn't come back in a healthy way. It actually broke down and stayed in the mess, right? Now, I'm going to go back and zoom, but that move up was 133%, which, that by the way, guys, that was 2019. Here's the COVID bottom right here. So this actually held up pretty well into COVID. It was in a mess before COVID. It attempted to break out after COVID. It did break out a little bit, that portion there, and then it got sucked back in. Sellers came in and sold off. People were like, you know what? I'm out of here. This thing broke 580. I'm having to squint here. 586, 587. And sellers came back in. So let's just zoom in a little bit because that 586, let's remember this number, 588. I'm just for easy math, I'm going to call it 590. It's 593. I'm going to round for easy math. This thing breaks above 590. Sellers have come in and they did it again. Okay. Now, by the way, guys, I'm looking at one of the best symbols in ARK Innovation's flagship fund here. So this is just not a willy-nilly. I mean, look, Kathy Wood has done a phenomenal job growing this company. I mean, a phenomenal job. This is one of its best symbols in its flagship fund. So it's holding up pretty well. Let's do this. Let's price this in ARK currency, ARKK. So here, what I did here is I took REGN And instead of pricing it in dollars, I priced it in ARK Innovation Flagship Fund units. It's a relative price chart. You can see that you would have wanted to stay out of Regeneron, if I've been pronouncing that. I think it's hilarious, just the silly names that come out of biotech and pharmaceutical industry. But you can see just right there, Regeneron, REGN, started outperforming, and it had its work cut out, and it finally broke above. So relative to ARK, it really battled, and it is strengthening and continuing to strengthen. So let's look at this. So if we priced Regeneron in spiders, it is not broken out yet, so I wouldn't buy it. And price it in the NASDAQ 100, this is interesting, it's about to break out in relative strength against the NASDAQ 100. But I would not be using the Qs as your main symbol, because the Qs have been underperforming. I'd be using the spiders this year as your relative index to beat. But it is underperforming. That's Regeneron. So now let me go back to it, REGN here. So what I just want to quickly see is what is going on with this thing. I just want to see from a kind of a Fibonacci retracement. Did it do any nice retracements of its big 133% move here? So it did. It broke out at that 590. So let me just put 590 on the screen here so you can just see. So that was its old lifetime high right there, that green. Let's just make it as big as. So that was Regeneron's old lifetime high. Sellers came in. You could see it attempted to break out again. Sellers came in again. And from a Fibonacci retracement, it retraced 50% of its move. So it had a 50% Fibonacci retracement here, and buyers came in. I would not be trading this. I would not be buying this. So either as an investment or a trade, simply because it's so noisy and there's so many better symbols to buy. Like you don't especially as a trader, you don't have to buy this. You don't have to buy anything. And as an investor, your metric to beat is a index, right? And I understand the pick of the month newsletter world bashes an index, but guys, bottom line, almost no one can beat the S&P 500 with dividends reinvested over any 5-year rolling period. And no newsletter will compare their performance against that because they'd underperform. Their job is to sell you excitement and dopamine hits. So there's its lifetime high at 590. It's under that. It did a 50% Fibonacci retracement, which I'll give it that. It was, not bad. It stopped falling. If you see where it stopped falling, kind of where it couldn't break out before. So that gives it some strength. But this is so messy right here. It has to break through all this past resistance, I would skip it. Again, because you don't have to buy this. There were other symbols that came up. PCAR. So let's just look at this guy. This guy was one of, I think, only 2 symbols that beat the S&P over a 1-month period. So I like this one much better. It has, I'm going to zoom out in a second to see what its old lifetime high, but you can see at least right here, it sat back down on that resistance. It couldn't get above that. And then once it finally got above that, each time it hit that 90, let's call it $91, buyers came in, buyers came in, buyers came in, buyers came in. 4 times at $91, buyers came in. With this symbol, people are willing to pay $91 for this. That's super important to understand where the buyers are coming in. I often talk about you have to understand where the buyers and sellers are hiding. This is an example of where they were hiding. Let's just see. Let me just zoom out. How old is this publicly traded stock? Got to zoom out some more. Let's just see what we got here. This thing's been around for a while. More than 30 years publicly traded. Amazing. Been around more than 30 years. I'm just going to pop to 40. Okay, it goes back to 1981. I love that this thing is up and to the right. Of course, it has its falls with the market, but it's $33 billion mid cap. Whatever it's doing, it's continuing to do better and better. I mean, that's a price chart that's beautiful, right? It's going up and to the right. And you can see as this super zoomed out, It's just consolidating here. This is just a consolidation. So I like this. Like, this is a nice looking price chart. These are the type of price charts that you want to own. Now, how you own them, how much you put into them, where the stop loss is, where the target is, how you manage your trading positions, how you manage your four main feelings: mad, sad, glad, afraid. That is where the magic is. That's actually where the money is. Finding the symbols is the easy part. It truly is the easy part. Let me just make sure everything is going on. So super, super important that you understand, right? That price charts are important, very important. Finding symbols obviously is important, but it's not where the magic is, right? Because finding symbols after you know how to do it is actually simple. But man, PCAR looks beautiful. It keeps being bought at $91. Obviously, it's in a trading range right here. So that is really important. Got that? Okay, and then there was one more ICE. Just bring this in, ICE. Here's ICE here. It's looking very much like PCAR, 65 billion, so it's about twice the size. And I think if I zoomed out, we're probably looking at lifetime highs here also. Yeah, I mean, look at that. Clearly, this is the global financial crisis right here. Intercontinental Exchange Group really got hit. Let's just see how bad it got hit back then. Down 75%. The S&P fell 58% during that period, so it fell twice as hard as the S&P. But this is beautiful. I mean, look at this. Up and to the right is what this thing is doing. I like PCAR over this, but we'll price this in PCAR units, PCAR units in a second, just to see which one's better. But you can see here when it broke out to new lifetime highs, sellers came back in, but it's a higher low. So if I were to divide this by PCAR, PCAR is the better investment out of the two. So that is looking at ARK Innovation Funds. They're all one fund. You would be over diversified and hurting your growth. And the reason you'd be hurting your growth is when you have 5 symbols and they're all falling, your brain's going to shut down and not know what to do when you have 5 symbols or 6 symbols or 7 symbols that are all doing the exact same thing. That's why being over diversified is so expensive. Thanks, KC. Thank you for all you do. I appreciate that, KC. You've been following me for years. Thank you for saying I'm awesome. I appreciate that, guys. This is a place where you can also ask me questions live. Guys, I'm in here as a market observer. There is no recommendations. I'm not your advisor. I'm not your planner. I'm not your money manager. This is just me coming in as a observer of the markets and showing you how important it really is to get organized, to get trained, to understand how to read price charts properly, to be in a community that holds that standard. Holding the standard of doing and following first principles is really where you start to increase your performance, to safely accelerate your performance, and to get more of your time back. So I hope you guys like this. Thank you so much. If you like this video, please hit the like button, ring the bell, leave a comment too. And also too, if you like this video, you will love the Clarity and Control free course that I have. It will be in the description. Over the past 2 decades of me helping people, train them, bring clarity and control back into their life. Those are the 2 things I've heard over and over. RC, I want clarity over my money. I want clarity over what's working and what's not working. And I want control back over my investments and my portfolio. I want that control back. And as we get older, 50, 60, 70, understanding and having clarity and control is so important. It's an absolutely free course. It's down in the description. Go check it out. I don't know what you're going to love about it most, but once you get into it, you'll know. It's only 4 videos. Thanks for being in my world. I'm going to hit the pause button now, and